Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Let's draw pivot points for majors: EURUSD and pound sterling dollar pair. Evangelos Poulakis would help us.
Monday was marked with a corrective slowdown. It will become clear in the coming days whether this movement will pick up and develop into a full-day correction. The next targets for the corrective movement are the resistances of the Ichimoku daily cross, 1.0763, 1.0785, and 1.0792. Strengthening by the monthly trend in the short term, 1.0795. The end of the correction and the start of a downward movement will make bearish targets relevant again. The low 1.0602 and the monthly support 1.0611. The lower timeframes show a moment of interaction with key levels 1.0719, central pivot level of the day, and 1.0746. Weekly long-term trend. Holding these levels can determine the current advantage. Trading below the key levels may strengthen the bearish bias, with intraday targets found at the supports of the classic pivot levels 1.0701, 1.0668, and 1.0650. Consolidating above and reversing the moving average will support the bullish sentiment, with targets at the resistances of the classic pivot levels 1.0752, 1.0770, and 1.0803. The supports around 1.2683 daily midterm trend and 1.2665 weekly Fibonacci in June have led to a slowdown. A breakthrough will turn the focus into lower supports. The nearest ones are at 1.2642 daily Fibonacci in June and 1.2596 weekly midterm trend plus upper boundary of the daily cloud. If the bulls recover their positions, the levels of the daily Ichimoku cross at 1.2775 and 1.2757 can provide initial resistance. On the lower timeframes, the pair is currently in between the key levels of 1.2689, central pivot level, and 1.2734, weekly long-term trend. The trend is practically flat, indicating prevailing uncertainty in the market. In case the pair chooses a particular direction, the intraday targets will be supports 1.2669, 1.2639, and 1.2619, and resistances 1.2739 and 1.2769.
We've got a trading plan for USDJPY currency pair. Miroslav Bawulski explains.
The USD-JPY pair successfully tested the target range of 158.00-158.24 and is now retreating. The Marlin oscillator briefly stayed in the bullish territory, but now it seems that it intends to return to the bearish territory. The nearest support level is strong at the mark at 157.00, as it closely aligns with the MACD indicator line. It's a blue line on the graphic. Once the price consolidates below this level, the yen could move towards 155.04. and 153.80. An alternative scenario suggests the pair rising to 160.40. The bearish potential is becoming more evident on the 4-hour chart. The Marlin oscillator has entered the negative territory and is pulling the price towards 157.00. Just below the 61.8 Fibonacci retracement level. The MACD line is above this level on the same chart, which to some extent facilitates its breakthrough after passing the MACD line. Nevertheless, it is still a strong support as the price needs a strong reason to breach this mark. Perhaps it will be a stock market crash, which could once again form a suitable pattern. We await further progress.
That's all for today. See you online soon.